Hello, traders. The market's been closed for a couple of hours and it's Wednesday evening, so that must mean that it's time for the weekly swing trading video. For those of you who are watching this video on YouTube, know that I release it to my one option members Wednesday evenings. That gives us a chance to get into these trades Thursday and Friday. Then I release it to the public on YouTube on Saturdays. That doesn't mean that there's not any content here worth watching. There's a lot of education. You're able to see the process that we use to find these trades, and then you're able to see how we structure them. So hopefully you'll stay tuned. Also, go back and see how these stocks have done. Now, a week ago, excuse me, not a week ago, Sunday night, I put out a video and I released it immediately to all of you, and I had two bullish put spreads in mind. One was on COST, and that stock instantly took off, so we were not able to get in on that spread. The other one was on NIO, and that stock also took off, so we were not able to get in. The instructions were to cancel those trades if we were not able to get in by the close of Tuesday. So we'll continue to look for opportunities. Back to the SPY, you can see that the market's been in this very tight upward sloping channel. These are resolved in a couple of different ways. One would be with a blow off top where you get long green candles going right through the upper end of this trading channel, and then you have a buying climax and a reversal. I don't know that that's going to happen. Today we're kind of off to the races. We did put in a new all-time high today, but the market backed off because there was some unrest in Washington, D.C. So market wants to move higher, but you can see there's not much of a slope to this channel. The other way that it's resolved is all of a sudden stocks just kind of start meandering sideways. So there is no slope. You're just range bound horizontally. That's another way that this upward sloping channel can be resolved. Ideally, we'd get a dip at least down to this 50-day moving average. That would provide us with a nice entry point. You can see that's horizontal resistance there. That lines up with the 50-day moving average. That would be a beautiful entry point. The reason that that's significant is that when the market does pull back and when we do see selling pressure, we're able to gauge stocks for their relative strength. When the market pulls back and the stock holds its own, we know that the bid is very strong, and that gives us additional conviction when we start selling out of the money bullish put spreads. We don't have that right now. The other issue that we have is that option implied volatilities are very low. VXX measures option implied volatilities. It's also known as the fear index. Well, right now it's near historic lows. There's no fear in the marketplace. Interest rates are going to be low for at least the next year or two. We know that because the Fed said so this week. That means that stocks are really the only viable alternative. They at least represent an opportunity to have some decent upside. If you invest in bonds, your yields don't even keep up with inflation, so you're a loser for sure. Well, everyone is really pushing their money into the stock market, and we know that because margin debt is at an all-time high. What does that mean? That means that people are out there borrowing money from their brokerage firms so that they can purchase stock. Bullish sentiment is also extremely high. I've already shown you the fear index is very, very low. That means that asset managers are not out there buying protective puts. If they were, those option implied volatilities would be much higher. This is when you do get market corrections, when you have everything lined up, bullish sentiment, lots of investors borrowing on margin, you get very, very low option implied volatilities. Those are very dangerous circumstances. Do I see anything out there that tells me that the market's going to correct right now? No, I really don't. There aren't any credit issues, probably going to get a $2,000 stimulus check. That's also helping to prop the market up right now. So what do we do in a situation like this? The best thing we can do is to be very, very cautious. When option applied volatilities are super low, that means that we've got to sell premium very, very close to the money. One little whiff in the market, one little whiff in the stock, and we're in trouble. So we better pick very, very wisely. And that's what we're going to do today. We're going to err on the side of caution. I've got some really nice stocks that we're going to be taking a look at. And we don't have any positions on right now. And that's the way that I wanted to start the year. You can see the model account. It's at 9,992. No positions here. Staged order entry screen. I've got 4 positions that we're going to try and put on today. So we're going to take a look at each one of these stocks. Before I do that, I'm going to show you a search that I used, and I'm going to show you an additional way that Option Stalker can help you put the odds in your favor. Incidentally, in the tutorial section of the website, I released 3 videos this week. One of them's on order entry. You can trade right from the chart, super slick. One of them is on a new feature that allows you to add custom alerts, and you'll see that right here. So make sure and watch that. If you're an Option Stalker subscriber, you won't have this feature. You do need to have Option Stalker Pro, but it's really going to help us find trades, and you'll get pop-up alerts when there are a series of conditions that are met. It's very similar to custom search in terms of the fields and the criteria that we can use to find these trades. So what's my secret weapon this week? Well, you know that I like good, strong option liquidity when I'm doing my spread, so I'm using a value of 0 to 15. And here's my secret weapon, pre-earnings bull. Folks, we've got earnings season coming up. Now, this search helps us identify stocks that rally into the earnings announcement. So once that stock gets inside of 2 weeks from its earnings date, we know that 75% of the time it has a tendency to rally into that earnings release. And that's been true for the last 3 years or 12 quarters. That is statistically very significant. So we got a sideways market, not a lot of momentum to it. We've got earnings season coming up, so let's use that to our advantage, and let's use this search to our advantage. So you can see that when I came in here, I want a company that announces earnings after January 25th, and I went to February 5th. I didn't want to go too far out beyond February 5th because then I lose some of that edge. I know that my biggest edge is that the stock rallies inside of that 2-week window. But we also need to have enough time right now before that earnings announcement so that we can sell at least a couple of weeks out. We're going to have to sell at least a couple of weeks out to get any decent kind of option premium. I went through all of these stocks, and I'll tell you right now, Abbott, nice chart, horrible option liquidity. Cree, same thing. eBay, same thing. In some of these cases, the stocks had run up. GE, recent breakout, that was pretty nice. GLW looked good. Poor options. Intel, we tried a couple of weeks ago. We had to leg out of a position there. Not going to go there again. We were able to make money on our last Intel spread, but I don't want to stick my head in that noose again. I can go right down the list. The option liquidity was horrible on a lot of these. The bid-ask spread was super wide, or I had to go right at the money to get a decent credit. But I was able to find 4 candidates from this list that I like. And so let's go through the list and take a look. AXP was one of the first ones. And I missed, up here I also had trade signal bullish listed. And I could have actually put strength versus SPY in here as well. But we're going to start with AXP, and I'm going to show you why I like AXP. First of all, you can see that we've got this upward sloping trend line right here. It's broken through a downward sloping trend line recently, so this is kind of a bullish flag formation. We also have a nice upward sloping trend line here that comes into play right around the 118 level or so. So that is our first line of support, is at about $118. We also have horizontal support right here, and that's just about the 115 level, and you can see that's also where the 50-day moving average comes into play. 50-day moving average is at 113.70, but we want to key off of that 115 price level. So I'm going to put up my trade screen and move it into view, and then we'll take a look at AXP. Now, AXP should also benefit from the $2,000 stimulus checks. We've seen a lot of stocks rally, and we're going to be selling the January 22 115 puts and buying the 114s and doing that for a 20-cent credit. So let's go into that expiration cycle, Jan 22, and let's scroll down to the 115, 114, click on that bid, click on that ask. This is kind of a classic example of what you see. I mean, here you've got an 85-cent bid and an 84-cent offer. So this is a penny bid. Really? Penny bid offered at 35 cents. Well, we're going to try and get 20 cents for this credit spread. If I can't get 20 cents, we're not going to do the trade. Incidentally, we're going to try and enter these trades until the close Friday. If we can't get in by the close Friday, we're going to cancel these orders. We'll just keep waiting. We'll be patient. When we get that market pullback at some time, who knows? If I really like the market backdrop, we may even go out and buy some calls finally because option premiums have come in so much. But for right now, we're still looking to sell out of the money bullish put spreads. So let's review this trade one more time. AXP is the symbol. We're going to be selling the January 22 expiration, selling the 115 puts, buying the 114 puts, and doing that for a 20-cent credit. One thing that's very important to do right now when you're looking at the charts, hover over the E right there. Because if you do that, you'll see what the next earnings announcement date is. In this case, it's 126. Well, these options are going to expire on January 22nd. So this trade will be on for 2 weeks and 2 days. It'll expire, and then the company will announce the following week. And hopefully, some of that upward bias that we're leaning on will start to take place, and it will lend support to the stock. So I like AXP. I think it's going to set up well for us. We may need a little bit of help on this one because we've got the stock or the spread bid at a penny, offered at 35 cents. We're trying to get 20. We're more ask side than anything, but kind of in the middle. So we're going to need a little bit of a pullback in the stock to get filled on that. Hopefully there'll be a little bit of follow through selling after what we saw today, and that would help us out certainly. So let's go into the staged order entry screen and take a look at the next one. J&J, we're also going into the Jan 22nd expiration, selling the 155s, buying the 152.50s. So we'll put up J&J here. We'll get the option chain loaded, and then we'll take a look at that Jan 22 expiration date. And that was a 155, 152.50 as I recall. Just want to confirm, yes. So for this particular trade, we're going to be selling the J&J January 22nd expiration. We're selling the 155 put. We're buying the 152.50 put. There's $2.50 between the strike prices, so we're going to be asking for a 50-cent credit. If we're able to get this credit and the spread expires in 2 weeks and 2 days, we are going to make a 25% return. Very, very nice. And that is kind of my MO. That's what I'm looking to make when I sell out of the money bullish put spreads. Is this a magic number? No, it's not. This is just something that I personally am very, very comfortable with. It gives me a little bit of bullish bias to the underlying stock instead of just being flat neutral and being way out of the money. So I like this. Let's take a look at this stock and see what J&J is doing and see why I like this one. J&J's got this really nice upward sloping trend line here, and I urge all of you that when you see something like this, click, drop that line. This is a GTC line. When it's breached, there could be a selling opportunity for me, a shorting opportunity, and the stock could easily retrace back to these major moving averages, which are converging right around the 147 level. The reason I like J&J is you can see that it's had really nice price action this week. It had a gorgeous little breakout here through that horizontal resistance at the 155 level, well, that's what we're going to be leaning on. We are banking on this 155 level holding into earnings. And that also coincides with this upward sloping trend line. And you can see that the volume on this rally has also been excellent. So the stock is not too far out of the money. It's about 5 points out of the money. So for the next 2 weeks, we need it to behave. We don't want any big market surprises. We want the market to just kind of tread water into earnings announcements. And we want the stock to just sit right where it is. J&J, the second trade that we're going to be doing. The third trade on the list, all of you are familiar with. It's been a hot stock, Tesla. Tesla's been really nice. It's got some pretty decent option implied volatilities. We're going to hover over that earnings date, and you can see that it's February 3rd. Let me go back and make sure that I did that so that you can see on Johnson & Johnson earnings announcement date 126. Our options will expire on 122, so they expire before the earnings announcement. Very, very important. I do not hold any option positions over earnings announcements. I will trade before earnings, I will trade after earnings, but I do not hold over earnings. I feel that is a crapshoot. And if you've got bullish put spreads out there and time decay is supposed to be working nicely in your favor, but you missed that earnings date and your spread spans the earnings announcement, the time decay is just not going to be very great on those options because there's a surprise component. Those option implied volatilities are going to retain their value because earnings season is coming up. So you want to make sure that when you're selling premium that expires before the earnings announcement date. When you are buying premium, you want to make sure that that expiration date is after the earnings announcement because those options will hold their value really, really well. So back to Tesla. Tesla, we were able to go a little bit further out in time because you can see February 3rd is the earnings announcement date. In this particular case, we are going to be selling the Tesla 650 puts and buying the 647.50 puts for a 50-cent credit. So let's go in and let's take a look at the options for that January 29th expiration. And because we have an extra week on this one, we're able to distance ourselves a little bit more from the money. And there's our strike price, 650, 647.50. Let me confirm, 650, 647.50. So let's take a look at the trade. Recap, Tesla, January 29th expiration cycle. We're going to be selling the $650 put. We're going to be buying the 647.50 puts, and we're going to be doing this for a credit of 50 cents. There are 2.5 points, $2.50 between the strike prices. So when we have that, we want to make sure that we're taking in a 50-cent credit for this trade. You can see that the spread is currently 10 cents bid, actually a negative 10 cents bid, offered at $1.10. So we are right smack dab in the middle of this spread. If I put this order in, can I expect all things remaining constant to be filled on the open tomorrow? Probably not. Nope, the stock is going to have to pull back just a little bit. Probably going to need to see the spread maybe 20 cents bid offered at $1.40. Then we would have a chance to get filled at 50 cents. But I do like the stock. You can see how it's got this nice upward sloping trend line here. And you can see how it recently broke out to a new high, recently added to the S&P 500. So it's had a lot of institutional interest for that reason alone. But it's been able to march higher with the market advancing. And right now we're seeing a lot of interest in any kind of clean energy stocks really seem to have a strong bid to them. So I think Tesla is going to be able to hold its own into that earnings announcement. This week they announced that they are way ahead of their production schedules as well. So there is a bit of a tailwind to the stock. I think we're going to be fine. Even if the market runs into a little snag, I think Tesla is going to hold its own. And we know that it likes to rally into the number. So, yes, this one is 3 weeks and 2 days we have to wait to make that credit. But I like it. I think this is going to be a pretty decent trade for us. We'll go back into the staged order entry screen and we'll take a look at the last and final stock. McDonald's. Here we're going back into the January 22nd expiration cycle, and we're going to be selling the 205 puts and buying the 202.50 puts. So let's bring that option chain up. Click on the Jan 22nd expiration cycle. And let me confirm the trade. 205, 202.50. Click on the 205s. Click on the 202.50s. By now, you probably already guessed it. We've got $2.50 between the strike prices, so we're going to try and bring in a 50-cent credit on this. Now, this spread is only going to last us for 2 weeks and 2 days, so we don't have to wait a long time on it. And we can see that the spread is 31 cents bid, offered at 70 cents. We could get filled on this one pretty easily. In fact, I'm expecting to. McDonald's tends to be a fairly boring stock. So we've got the impetus into the earnings announcement working in our favor. We also have another little statistical edge here, and that is that we're selling these 2 standard deviations out of the money. Red is 1 standard deviation. The blue dotted line is 2 standard deviations. So we have that working in our favor as well. Now let's take a look at McDonald's and see what the stock looks like. Great big nothing burger, pardon the pun. And that's okay because the stock has nice horizontal support right here, right at that 205 level. That is our short strike price. I'm expecting that horizontal support to hold. You can see almost one touch there, another touch here, another one there, there. Almost. So we're right in there with some nice horizontal support. Not a lot going on with the stock. That's okay. We're expecting it to gradually float higher as it comes closer and closer to its earnings announcement date. So I like that. I think McDonald's could work out well for us. Even if the market gets into trouble, McDonald's not typically the type of stock that moves a whole lot. Very stable business model. So those are our 4 trades that we're going to try and get in. I don't feel like I'm reaching on any of these. I want to take advantage of a statistical edge. McDonald's, we've got standard deviations working in our favor, but for all of these trades, we know that they like to rally into the earnings announcement more than 75% of the time over the course of the last 3 weeks, and their earnings are coming up. Very, very difficult market to trade, and you've got to be careful. Swing trading is really the best way to go if you are extremely short term. So we're day trading in the chat room. If you find a really nice stock with good momentum and the stock closes near its high of the day, you can hold those positions overnight. I wouldn't hang on to them for more than 1 or 2 days right now. The market's just not doing a whole lot. So it's kind of guerrilla warfare. You're really having to pull out all the stops. A premium is placed right now on your ability to select great stocks. So make sure that you're using all the tools that you have available to you in Option Stalker. These pre-earnings announcement searches that I've just highlighted are excellent for you to go in and use. So this is pre-earnings bull. Set up your dates. If you're a premium seller, then you want to come in and you want to make sure that you've got at least a couple of weekly options that can expire. That way you're not having to go too far out in time. And then don't put your back date too far either. You really want to try and capture stocks that are announcing more than 2 weeks out, but not more than 4 weeks out. That's kind of the sweet spot that I look for. Now, once the earnings announcements start coming out, we've got another tool, and this is a great search that you can use. This strong after earnings, this shows us stocks that have had a positive reaction to the earnings announcement and that have recently announced in the last 2 weeks. That is a great way to go back and find these stocks. Now, we're starting off the year right now, so if I click this, there's nothing there. Well, nobody's been announcing earnings. That's why there are no results there, because we were in a holiday session. None of the companies were announcing earnings. So that's another really good search that you can use to find these option plays. Now, let's say that you are a day trader or a very short-term swing trader. You can also click buy into earnings. Now, these you got to be a little bit careful with because these companies are inside of that 2-week window. In fact, they could be announcing earnings tomorrow. So when you click on them, like BBBY, you should make sure that you click on that earnings date. Hey, look at that. It announces earnings tomorrow on 1/7. If I would have picked up on this search earlier, I would have had a really nice move in here. That stock has rallied from $18 to $21 in the last 2 sessions. So yes, there are going to be some really nice stocks in here. Look at this one, another one, downward sloping trend line, broken to the upside. Really nice stuff. I'm telling you, these stocks like to rally into the number. This is great for day trading and very, very short-term trading. What do you mean short-term trading? What would you do? How would you use that as a swing trader, Pete? I'd look at these stocks and I'd go, IBM, going to be announcing 119, a week away, downward sloping trend line, broken to the upside. Beautiful. I know that it wants to rally into the number. That's how you do it. You don't hang on to it for a long time. Just hang on to it for a little time, make some money out of it, move on to the next one, because this list is going to continue to grow as we get closer and closer to earnings season. Look at all these stocks. You can see. And you can run these searches also. P&G, probably going to be a nice one too. TSM, really nice move inside that 2-week window right now. And PG could set up pretty well. Let's see here. You got 120. This is a nice little upward sloping line. You've got the 50 and the 100-day. Could be a little bit of a credit spread in here at the 137.50s. So check that one out. That could work. You're not going to get a lot of premium on this because look, it doesn't go anywhere. But you know you've got the odds in your favor when you use this search. I'm constantly adding new features to Option Stalker because I want to put probability on our side. I want to make money. I want you to make money. I hope you've enjoyed this video. If you like the content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss these videos. They can come out at any time. I'm trying to do about 5 of them a week or so. And when I have time, I post them. Thanks so much, everyone. Good luck with your trading. I hope we get at least 1 or 2 of these trades done. If you're not filled by the close Friday, cancel these 4 trades and I will keep trying to get us into new trades. If I got to do a separate video and release it on a Sunday night, I'm going to do it. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.